Hello students, welcome back. This is Dr. Mercado speaking. I hope all of you are having an amazing week. During this particular week, we are going to be covering Chapter 14, which deals with adjustments for a merchandising business. Okay, this is Accounting 1304, Introduction to Accounting 2. Now, before you begin working on any of your assignments for the week, please make sure that you read. The chapters are not very long. They do have a lot of diagrams, and within those diagrams, images, graphs, whatever we want to call them, there's a lot of information included. There's a lot of steps, there's a lot of examples that need to be analyzed to better comprehend the information presented in the chapter. Okay, I am not going to go over the actual content of the chapter. I'm going to let you read that on your own. This lecture, like all of my other lectures, it's more application based. We're going to solve problems. But this particular chapter covers a lot of things. For example, it allows us to help us prepare adjustments for a merchandising inventory using the periodic inventory system, prepare adjustments for unearned revenue, prepare adjustments for a merchandising business, journalize adjusting entries for a merchandising business, and prepare adjustments for a merchandising inventory using a perpetual inventory system. There's a lot of information being presented in the chapter, so reading is critical. Okay, so now I'm going to jump over to the actual exercise. And this is the information provided. All I did, I copied and pasted this information over here. You know what, I'm going to change this because it's not a partial, it's the actual completed worksheet. Now that I've extended it. Okay, I'll just put here partial. Okay, so what I did here is I copied the information provided, the partial trial balance. I copied it over. So these numbers are basically the same thing that I have here. And then, of course, I've extended it to add my adjustments column and my adjusted trial balance column. Okay, so this is the information provided. It says merchandise inventory adjustments using a periodic inventory system with sales returns and allowances. Okay, so it says use the information provided below to prepare a partial end-of-period spreadsheet for Karen's gift shop for the year ended December 31st. The ending merchandise inventory is $60,000. Karen estimates that customers will be granted $15,000 in refunds next year for merchandise sold this year. The estimated cost of the returned inventory is $10,000. Then they give us a partial trial balance provided, which is what I copied over here. We have three requirements. The first one is to complete the adjustments column for merchandise inventory and related accounts. So I've added my adjustments column. Second of all is to extend all accounts to the adjusted trial balance column, which I have included here in my worksheet. And then third is prepare the cost of goods sold section from the spreadsheet. Okay, so we have three requirements. Okay, so all I did is, like I stated before, I just copied the information provided in the partial trial balance over to my spreadsheet that I have created, and then we can begin working on our adjustments. Okay, if you don't know what we're doing, I highly recommend that you go back to your ebook to specifically section 14.1, which deals with the adjustments for merchandise inventory, the periodic inventory system. Now if you scroll down to the bottom, it has a series of steps. Okay, we're going to start with step number 1. Okay, so step number 1 is telling us that the beginning inventory is removed by crediting merchandise inventory. Income summary is debited because this amount is used in the calculation of cost of goods sold and net income. So we're going to be following a series of steps to help us complete our worksheet. So the first thing that they're asking us is to credit the merchandise inventory and debit income summary. Okay, so let's go back and let's see what's going on here. Okay, so we've got merchandise inventory. So what's happening with our merchandise inventory? Okay, so it says here that the ending merchandise inventory is $60,000. Okay, so we have to update our merchandise inventory information. Okay, if we go back to the ebook, it says that the beginning inventory is removed by crediting merchandise inventory for the amount. So what am I going to do? I'm going to credit merchandise inventory by its original amount, which is $55,000. Okay, and then it tells me that I have to debit income summary. This is the amount that is used in the calculation of cost of goods sold. So I'm going to go ahead and I'm going to credit my merchandise inventory, and I'm going to go ahead and I'm going to debit my income summary. Let me just put some commas in here. That way it makes it cleaner for me to see. Okay, there we go. Okay, so that is step number one. We're going to clear the balance that we have in our merchandise inventory by crediting it for the full amount, and then we offset it against income summary. Now, let's go back. On step number two, it's saying that the ending inventory is entered by debiting merchandise inventory and income summary is credited. So whatever our ending inventory is, we're going to debit merchandise inventory and we're going to credit income summary. So the amount of my ending inventory is $60,000. So I'm going to go ahead and I'm going to debit my $60,000 to merchandise inventory, and then I'm going to credit income summary. Okay, so what has happened here is I have canceled with this credit entry. I have canceled my original transaction of $55,000, and with this debit I have updated my account with the correct figure that I have in my ending merchandise inventory, which is $60,000. Okay, so those are steps 1 and 2. Okay, now let's go over here to step 3. Okay, step 3. Okay, and it has a lot of information that you're going to read over, explaining what's going on. But basically in step 3, we're going to go ahead and we're going to debit our sales returns and allowances, and we're going to credit our customer refunds payable. This is a year-end adjusting entry for any returns that are being handled. Okay, so during this particular time, okay, let's see, let's go back and see sales returns and allowances and customer refunds payable. Okay, so let's see. Sales returns and allowances. Okay, here we have customer refunds payable. Okay, so what is the amount for that? Okay, so it says here, Karen estimates will be granted a refund next year. Okay, so Karen estimates that customers will be granted $15,000 in refunds next year for merchandise sold this year. Okay, so currently in our customer refunds payable account, we only have $12,000. Okay, according to this, the ending Karen estimates that the customers will be granted $15,000 in refunds next year. So we're short. Right now we only have $12,000 sitting in our refunds payable account. We need to take that up to $15,000. Okay, so what does it say we should do? We're going to go ahead and we're going to debit sales returns and allowances, and we're going to credit customer refunds payable. So customer refunds payable is going to get credited for those $3,000. Okay, and then we're going to go ahead and we're going to debit. What are we going to debit? Let's go back. We're going to debit sales returns and allowances. Sales returns and allowances is going to be debited $3,000. And if you notice, debits must always equal credits. Okay, so that happened in step 3. Now in steps 4 and 5, here we have some returns. Okay, so we have estimated returns inventory. Okay, so what is happening here in steps 4 and 5, we adjust for the estimated inventory to be returned next year. Okay, so let's see what information they're giving us in the problem. We've already taken care of that. The estimated cost of the returned inventory is $10,000. Okay, $10,000. So what are we going to do? Well, it's saying here that first we're going to go ahead and we're going to debit for the original entry. We're going to debit income summary and we're going to credit estimated returns inventory. Estimated returns inventory. So estimated returns inventory is going to be credited for the original amount. Okay, and I am going to debit income summary. So I'm going to put another line item right below it. It'll still continue under income summary. Okay, so what are we doing is we're canceling the original transaction. What we're doing is it's stated here that we had planned for estimated returns inventory of $8,000. we had a debit balance. I'm going to cancel that by crediting it. Now we're at 0. Now I can record my entry for the correct amount. My estimated cost of returned inventory is $10,000. So that is the correct amount I'm going to enter. So I'm going to go ahead and according to the problem here, it says I'm going to debit estimated returns inventory for the correct amount, and I'm going to credit income summary. So the correct amount is going to get debited for the $10,000. I'm sorry, I put it in the wrong column. Estimated returns over here. $10,000, okay? And I'm going to credit income summary. Okay? So those are the things that happened during the period. Those are the adjustments that are being provided to us there. Now me, because I am working on Excel, I'm just going to quickly add a totals column just so I can make sure that my debits equal my credits. Because if we're not in balance, then we've got a problem, okay? Okay, so this ones we don't, but this ones we do. The adjustments we do, because here we still have to calculate our income or our loss. But here I have got my debits and my credits. My adjustments are in balance, so I'm good. I'm good right there, okay? Just to make sure that my debits equal my credits. We want to make sure that we are in balance, okay? So let me delete that. My debits did equal my credits. That way we don't get confused with those numbers. Okay, so now these are my adjustments. Now I have to rebalance or recalculate and fill out my adjusted trial balance. Okay, so what are we going to do? Well, I had a beginning balance, a debit of $55,000. Then I have a credit of $55,000, so that zeroes out. So what is my ending balance? Your ending balance would be a debit of $60,000. Okay, so that number, the $55,000, cancels with that credit of $55,000. So what we are left with is with the $60,000 debit there. That is what we're entering as our ending balance. The same thing here. My debit cancels my credit, so that means that we're at 0. My balance will be $10,000 debit. Okay. In this case, I had a credit of $12,000, and now I've got another credit of $3,000. So that means I have $12,000 plus $3,000. That gives me a $15,000 credit. Just make sure you put it in the right cell. Okay. Now for income summary, I've got 55,000 debit and 60,000 credit, and then I've got 8,000 and 10,000. Okay, so I'm just gonna go ahead and I'm gonna copy these over exactly how they are. I'm not gonna tabulate them yet. Okay. Okay. Now I'm going to go ahead and I am going to work on my next section, which is my sales. Okay, there was no adjustments to sales, so that's going to stay as a credit of $280. Okay, now my sales returns and allowances, I had a debit of $18,000, then I have another debit of $3,000. So that means that I have $18,000 plus $3,000. That gives me $21,000. Okay, and that is a debit balance. Okay, and be careful when you're adding. You have two debits here, so then that means you're going to have a debit balance for the total of the two. Okay, for purchases we had no adjustments. That stays at $200,000. Purchase returns and allowances, we had $3,000 credit. Purchase discounts, $2,500 credit. And then freight in, we had a debit of $1,400. Okay, so we have extended our information over to our adjusted trial balance. Okay, and then we followed these steps that are provided to us on the ebook. Okay, and let me see. You see, and then on figure 14.2, they have an example of the end of period spreadsheet, kind of like what we're working on right now, and as well as the cost of goods calculation that you can follow using the example provided on your ebook. Okay, so it is being included or explained in the chapter. Okay. Okay, so that is it for requirement 1 and for requirement 2. They're asking us to complete the worksheet, entering the adjustments and then the adjusted trial balance. Okay. Requirement 3 asks us to prepare the cost of goods sold section from the spreadsheet. So we're going to prepare the cost of goods sold section from the spreadsheet. I have it set up here, so we're going to go ahead and we're going to figure out our cost of goods sold. So the first thing we're going to do is we're going to begin with our merchandise inventory, January the 1st. Okay. My merchandise inventory, January the 1st, was $55,000. Okay? And I'm going to be highlighting them as I use them. Okay. $55,000. Let me put some commas here. Okay. So we're going to begin with our merchandise inventory, $55,000. Then we're going to go ahead and we're going to add our estimated returns inventory. Okay. And according to the problem, we had estimated returns inventory of $8,000. If we add those two together, that is going to give us $63,000. Okay. Now from there, I'm going to add my purchases. How much else did you purchase? Well, according to the problem, we had purchases of $200,000. Okay. But just like we had purchases, we had some returns and allowances that go along with it. So I'm going to go ahead and I'm going to deduct less my purchases, returns, and allowances. Okay. And we had purchases, returns, and allowances of $3,000. Okay, so I'm going to put those there. We also had purchase discounts. We had purchase discounts of $2,500. Okay, so I'm going to add those two together. And that gives me $5,500. Okay. So I had purchases of $200,000, and I'm going to subtract my returns and allowances and my purchase discounts, and now I can calculate my net purchases. Okay. Let me underline here. Okay. So your net purchases is going to be your purchases minus the total of your purchase returns and allowance and purchase discounts. You're going to subtract that, and that will give you $194,500. So you subtract, you get the $200,000 minus the $3,000 minus the $2,500. That gives you the $194,500. Okay. And then we had some freight. We're going to add the freight in. Our freight was how much? $1,400. Very good. Right here. $1,400. Okay. So we have our freight right there. So all of these numbers are coming from our spreadsheet right here. Okay. I'm not making anything up. Now I can calculate my cost of goods purchased. Okay. So to calculate our cost of goods purchased, I'm going to go ahead and I'm going to get my net purchases plus my freight. That's going to give me $195,900. Okay. Now I can calculate my goods available for sale. Okay. To calculate your goods available for sale, you're going to get your total that we had obtained from the beginning, which was our beginning inventory, plus our estimated returns inventory, our $63,000, plus our cost of goods purchased, which is the $195,900, and that gives us goods available for sale for $258,900. Okay, so remember, it's your beginning inventory plus whatever we estimate we're going to get back in returns. That's $63,000, plus your cost of goods purchased, which is your purchases less your returns and allowances less your discount plus your freight. Okay, so that gave us $258,900. Now I'm going to subtract our merchandise inventory December the 31st. Okay, so merchandise inventory on December the 31st, we had $60,000. Okay, $60,000 as of the end of the month. Okay, we're going to subtract those $60,000, and we're going to subtract our estimated returns inventory December the 31st. Okay, and we had 10,000 in estimated returns inventory, 10,000. So we're going to add those right there. Okay, now we can add those two together and carry our balance over. So that's going to be the sum of these two, the 60 and the 10. That gives me 70,000. Okay, and then finally I can calculate my cost of goods sold. Okay, and to get your cost of goods sold, we're going to go ahead and we're going to get the $258,900, which is our goods available for sale, minus our 70,000. Okay, and that will give us $188,900. That would be our cost of goods sold. Okay, $188,900. So using the information provided in our worksheet, our partial worksheet, we're going to go ahead and we're going to prepare our cost of goods sold section using the spreadsheet. Okay, and everything is basically coming from our top portion, our trial balance, and then towards the end is our adjusted trial balance. Okay, so it's fairly long, but it's just a matter of following the steps. Read over this information in section 14.1. It has illustrations of how to do it. It has examples of how to complete. It has the steps outlined, steps 1, 2, steps 3 to 5, step 3, steps 4 and 5. So all of the actual information, all of this information, as well as examples for steps 1 through 5 are being covered and included in your ebook. Okay, so make sure you refer back to those sections. Sorry about that. So that is basically the end of exercise 14.6. Just be very careful when transferring. I know it's different preparing the end of period spreadsheet for a merchandising business and for a sales business, but that's just some of the adjustments that we have to work with and incorporate into our new spreadsheet that we're creating specifically for a merchandising business. Okay, so that is basically it for exercise 14.6. Have a wonderful day, and until next time, thank you.